Sunil Subramaniam, who is joining us right now. Hi Sunil, good afternoon. Help us with your understanding, the kind of rebound that we are seeing on the markets today. What is your sense that there could be some more pain that could be in for store, or this recovery has just started for the Indian benchmark indices, at least for now to start with, and maybe we could be in for some pre-budget rally as well?
I'm not so sure about that. I think that the bounce today that you saw was probably some value buying from the domestic institutional investors. I think I saw that they are sitting on quite a bit of cash. And in fact, over the last 2 days, they've been booking profits on mid and small cap. That's why you see the fall in the mid and small caps has been over the last few days much more than in the large cap. So I think this increasing cash allocation in the domestic space is probably getting deployed into specific large caps where the correction, they feel, has brought it down to a reasonable valuation level. So this is more of I wouldn't call it bottom fishing, but buying some stocks on the downtrend. And I think the real deployment of cash will happen only after the two events, which is the budget as well as the RBI policy to follow soon thereafter. Of course, on the 31st, we'll have the economic survey come out, which will give you a sense. And paradoxically, what will happen is that a slowdown, if it's confirmed by the economic survey, to that extent, the chances of an RBI rate cut go up. So, which will be positive for rates in sensitives and the banks and all of that. So, I think some of the buying in the banks I would attribute to that they're seeing that the earnings season is reflecting the fact of the slowdown. And so, better chances of a rate cut. And so, some number of buying into that. So, this is just like I said, very selective buying in places where the correction has happened. I wouldn't call it a bounce back on a sustained level yet.
Yeah, doesn't seem to be the case because it's getting pretty slippery, and I think today's uptick was just used as an opportunity to sell into. But Sunil, once the dust settles down, do you think there are pockets in the market which have now become a value buy?
See, value is a very relative term. So if you see the mid and small caps are trading at a 50% plus on a valuation above the large caps. So clearly the whole large cap space, I would say relatively is a value buy. The second aspect here is that I think consumption, because FMCG valuations look very high purely on a PE basis, but they are traditionally a high valued sector. And relative to that, over the last year, that's been a sector which has not performed. Whereas in the budget, I expect the government to put more effort around, say, increasing the tax, bottom line of the tax so that more people don't pay tax. They will also put some money down to the bottom of the pyramid. So I think consumption at the mass end should get a boost. And so I think it's a safer play to buy into the consumption space today because the downside is not much. And if the budget really turns out to be a little more populist, those stocks and those sectors could see a rally. So I think to me, banking and consumption. Banking, because as I said, slowdown the economy is indicating that there could be a rate cut possibility definitely from RBI. So I think these two sectors which haven't performed, if you leave the last 1 year returns, both these have been laggards compared to the broader market. So that's the space I would say, if at all any buying can occur today, there's a downside, say margin of safety at the bottom. And if some positive triggers come through in the two events, then there could be a rally there.
All right, that's the take on the financials. But meanwhile, we also have the JSW Infra numbers as well, when the profit has seen a jump of almost 32% on a YY basis. EBITDA saw a growth of 22%, but it's the margins that has taken a bit of a hit. 151 basis points of decline and 49.5% is what the company clocked in. But Kunal, if you can help us with a chart check on JSW Infra, because this stock has also been a good mover of late, good mover in the past 2 to 3 years, but off late, obviously that volatility kicking in. So 262 levels, where do you see this headed?
It's a good chart. As you rightly said, from I think 150 levels a couple of years back, the stock had moved up to 350 kind of a zone. I haven't been tracking the stock very, very closely, but then just looking at the charts over the last 4-5 weeks, and this week specifically, the stock forming a candlestick, a doji candlestick pattern indicates that maybe we could be at a point where the stock would have formed a major bottom for itself, hitting that level of 250 to 51 for JSW Infra. So I believe keeping that as maybe a short-term stop loss, traders could look at a contra buy for the stock over the near term, expecting the stock to close the gap at least, which was created in the last 2 weeks, and that could be close to 275 to 285 levels.
All right, 275 to 285 is something that Kunal is expecting when it comes to JSW Infra, closing the gap off late. But today, real estate counters are also having a good day because in Nifty 500, we are seeing stocks like Shobha that are holding on to the gains of almost 8%. And the index overall is seen a gain of more than 2% the last time I checked. But Naresh, specifically on Shobha, the stock has also been very volatile. We have seen those pressures trickling in from higher levels, but 8% jump and now inching to the 9% move at the day's highest point. Where do you see the stock headed?
Almost a 40% correction from 2100 all the way down to 1150 odd levels. And now yesterday also tried to make bounce back today also. So we are trying to form a base formation around that 1100, 1150 mark. Closer to 1400 would be a tough area, 1400, 1450. Post that, whenever it dips back to 1200 odd levels, that would be a buying opportunity. So for now, wait it out and wait for another dip.
All right. That's the take on Shobha Developers. But meanwhile, we were just trying to listen to the Cipla management, and it's a very important commentary coming in where Umang Vora, who is the MD of Cipla, does say that these margins of 28% that has been clocked in Q2, they are not sustainable. End of the year or more, they have guided for the full year of the margin, and 28% is definitely higher than that. But the management is saying that what they have clocked in Q3 that are not sustainable, and other than that, supply issues for lanreotide should ease by Q1. This is one of the key drugs when it comes to Cipla, and hence that pressure from those higher levels is what we are seeing on the stock price. But with this, let's move on and let's also start taking the BTST ideas from both of our experts. And Kunal, help us. What's on your list?
So I'll go with two buy calls. Tata Steel is the first stock which I would suggest as a buy, more of a contra buy. The stock looks like to be in a zone where a near-term bottom could be at place. Candlestick patterns, volumes indicate a potential turnaround for the stock. So betting on Tata Steel, targets of 136, stop loss at 126. And the second would be a buy on HDFC Life. The gap which was created on the stock in an up gap, that gap has been filled and the stock has come back to the retest of the 600 levels. So keeping 600 as a low would be bullish on HDFC Life for a near-term target of 634.
Okay, that's a buy on HDFC Life. You know what? Let's quickly cut across, and Umang Vora is currently addressing the media and briefing the analyst fraternity on the Cipla numbers. Let's listen in.
Be able to launch it towards the end of the second half of next year. That is the outer limit that we think Abraxane could be launched. And Advair, I think we're about filing the data from our facility in the US. So, it depends on the clock that the agency sets, but could be from there, could be 6 to 9 months. The facility will be inspected, and it will be about 6 to 9 months from there.
Varun has also asked if we will revise our guidance, especially on margins.
Yeah, so just on guidance, I did mention that, with the quarter remaining, we're not going to revise anything. We're just saying that we're going to exceed the guidance range. That was an answer I had given right at the beginning of the call. So, yeah, we will be exceeding our guidance range.
He's also asked one last question. How big is the GLP-1 opportunity, and is the company doing any in-licensing with Eli Lilly?
Well, the thing with the GLP-1 category is that it's very difficult to estimate demand for it. And that's largely been the experience that people have seen in the West. I do believe that the category in India is also going to be very large. And I think as more and more, we've seen this trend post-COVID where people are making healthy choices, and weight is definitely a big choice in how they will live their life. So I do think it's a big opportunity. Our Eli Lilly is a great partner for us. And as and when they deem appropriate that they do need a partner, I think Cipla is always available to be their partner.
I think that was our last question for the day. And that concludes our press briefing for today. Thank you everyone for joining us. Thank you, Umang, for patiently answering the questions asked. In case
All right, so that was the management of Cipla. Very important commentary coming in where they're saying that for the full year of FY25, the company will be exceeding their margin guidance going forward. And that is the case in being because 28% is what the company has clocked in for now is definitely a big surprise from the company. But with this, let's move on. And before we shut shop for the day, Naresh, help us with your BTST trades.
So first to be one Union Bank of India, good price volume action today. Stop loss at 109, target price of 116. Series of brand Industars, the stock has come back to the retest and is bouncing from that 345, 350 mark. Stop loss at 350, target price of 365.
Right, Industars is something that Naresh is tracking. 365 is something that he's working with. But today, if we talk about some of the auto names, definitely we did discuss about Tata Motors and Maruti as well. But other than that, TVS Motors from the two-wheeler pack clocked in a very good set of numbers, a 5% jump. And the stock is seen to be sustaining those high levels. Even Balakrishna Industries, some of the analysts disbelieve that the worst seem to be behind for the company. And there has been an upgrade coming in today as well. 5% jump, and the stock is seen to be sustaining those gains and those early morning gains as well. But Sunil, if you can help us with your expectations from the auto pack given the sell-off, and what do you make of the auto sector as a whole, and at this price point, any particular segment that you are betting big on?
So I think that auto is a good space for the corrections to buy because one, it's a rate sensitive. It's the ultimate rate sensitive. So like I said, I think the build-up for the RBI policy is turning positive. So I think auto as a pack, if there's any good news on the rate cut front, auto as a pack should rally. So that's a good one. The second aspect there, which I would like to focus on is, one is, I think, auto components. I think the export story has been very good. And I think increasingly you will find it's not necessarily to the US, but to the other emerging countries, I see a good future for that. So auto components are a big pick for me. The other aspect is I would still go slow on the heavy commercial vehicles and that segment and the tractor segment because we are nowhere close to a monsoon-related rally. But on the car space, right, the SUVs, I think the K-shaped recovery will sustain for some time. So the high-end SUVs and those and EV, obviously this year I think EVs will show. There's a lot of capacity creation happen there. There'll be a massive push, as you saw in the Auto Expo also on new EV launches. So I will be positive on the EV space within the car segment.
Sunil, what's the anticipation that the market has from the budget on Saturday?
I think finally the government has to focus on getting money to the bottom of the pyramid. I think that's very clear. And so to me, I expect that there is enough room within the fiscal space for the government to allocate to revenue and stuff which trickles down to the mass. So whether it's a tax rate cut or increasing the slabs, where the tax-free levels are there, that's one positive we expect in the budget. The second is some diversion from the capex side on two parts. One is you actually take money off capex and put it down the revenue stream. Rating agencies may not like it, but you've got to drive a balance. The second is even within capex, the developmental capex that they do, they should do it in areas where the money trickles down to the mid and small enterprises and to the thing, because labor creation happens only at that space. So I think employment generation plus getting money down to the bottom, these are the two areas where we will look in the budget speech for those triggers. And if they come through, then we could see a post-budget rally.
And no wonder then, Sunil, that right now, maybe and especially given the, under ownership within FMCG, a slight nibble into the sector would be beneficiary. And one can see that, tilt in the market already.
Yes, I think that's sustainable because the other aspect there is that, people have been putting off buying, because of consumer sentiment. And I think the budget could prove that kind of a trigger there. And hence, I mentioned that consumer staples is something, and there's a margin of safety there because they've already not really performed over the last 1 year. So you're not going to take much of a risk there. So I think domestic institutional investors will definitely start accumulating on that space in the coming weeks.
Okay, Sunil, great to have you on the show. Kunal, Naresh, we'll let you guys go on that note as well. And I'm going to hand it over to Ashesha for the closing trades.
Well, yes, ending the day in the green, but we gave up significant.
If you like this video, then like, share and subscribe to ET Now.